Markets whipsaw as Trump issues an Iran ultimatum and oil prices remain sky high. Welcome. This is Daily Market in 3 minutes. Let's dive in Wall Street. The S&P 500 closed up 0.4% near 6,612. The Nasdaq gained 0.5%, finishing around 22,000, and the Dow Jones added 0.4% to close near 46,670. The Magnificent Seven saw mixed action, with Apple and Amazon gaining over 1%, while Tesla dropped over 2% and Microsoft closed slightly in the red. Information technology and communication services won today, while energy and consumer staples fell behind. Looking at commodities and crypto, Bitcoin rallied over 1% to approach $70,000. Gold slipped slightly to around $4,676 an ounce, while silver hovered near $73. WTI crude oil stayed highly elevated around $112 a barrel. The dominant catalyst today is the escalating Middle East conflict. Over the weekend, President Trump issued a strict Tuesday deadline for Iran to reopen the Strait of Hormuz, threatening severe strikes on infrastructure if they fail to comply. At the same time, reports emerged of a potential ceasefire brokered by Pakistan. This geopolitical tug-of-war kept oil prices severely elevated but caused safe haven assets like gold to soften as traders weighed the possibility of a diplomatic off-ramp. Meanwhile, a strong March jobs report showed the U.S. economy added 178,000 jobs, far exceeding expectations. The unemployment rate also ticked down to 4.3%. This resilient labor data supported today's stock market gains, reassuring investors that the underlying economy remains stable despite the global chaos. Finally, Federal Reserve Chair Jerome Powell spoke at Harvard University, noting the central bank will likely look through the short-term oil shock and hold interest rates steady. This provided a sigh of relief for equities, though Powell also issued a stern warning that the U.S. national debt is on an unsustainable path. In the bond market, the 10-year Treasury yield ticked up to 4.36%, while the 10-2-year yield spread sat around positive 31 basis points. The U.S. dollar index held steady near 100, and the VIX volatility index hovered near 24, signaling that investors are hedging against further downside risk. The CNN Fear and Greed Index is currently sitting at 19, flashing extreme fear. This implies retail investors remain deeply anxious about the war and inflation, even as institutional buyers quietly accumulate stocks. Looking ahead, the market outlook remains highly sensitive to geopolitical headlines. Sustained energy-driven inflation could force the Federal Reserve to delay rate cuts, keeping financial conditions tighter for longer. Investors are closely watching 3 critical events this week. On Wednesday, the March FOMC minutes will be released. On Thursday, the February PCE report drops. And on Friday, the highly anticipated March CPI data will show exactly how much surging gas prices are impacting consumers. As always, this video is for informational purposes only and is not financial advice. Please like and subscribe for more. See you next time.